Assalamualaikum and very good morning. Today we will discuss another topic in international accounting, which will be the chapter 3 in the textbook, which is the international convergence of financial reporting. Okay, so for this topic, there are a few learning objectives that the student will be able to achieve after complete this topic. First, the student will able to explain the meaning of convergence. Yeah. Number 2, the student should able to identify the argument for and against international convergence of financial reporting standard. Number 3, the student should able to discuss the major harmonization efforts under the ISC. The student also should able to explain the principle-based approach used by the ISB in the setting accounting standard. The student should able to describe the proposed changes to the ISB frameworks. The student should able to discuss the ISB standard related to the first-time adoption of IFRS. Okay, the student should able to describe the support for and the use of IFRS across countries, examine the issue related to international convergence, describe the process made with regard to ISSB and FSB convergence project, and lastly, explain the meaning of Anglo-Saxon accounting. Okay. So for the international accounting standard setting, we will look on the evaluation of ISC and ASB in setting the international accounting standard, especially in the private sector. ISC and ISB is actually the same organization. We will look later on the evaluation of ISC and ISB. Okay, so the effort of ISB or ISC in the setting of the international accounting standard is, of course, with the support of accounting bodies, all over the world. We are talking about the international here, so accounting bodies internationally, standard setters, capital market regulators, government authorities, and financial statement preparers. Okay, so what they did is actually they try to do the effort is actually more on harmonization. We will look later on what is the difference between harmonization and convergence, which is in the harmonization we allow countries to have different standards, as long as they do not conflict. So meaning, for example, we are talking about Germany, we are talking about China, we are talking about Malaysia. So all these three countries will have a different standard. It's okay to have the different standard as long as the conflict didn't exist. So when we are talking about accounting harmonization, it will be considered in two ways. One, we will look harmonization of accounting regulation or standards. We harmonize the regulation or we harmonize the standards. And another one is harmonization of accounting practices, because sometimes, even though they have a standard, but the practices is also will be different. So there we will look on the two ways. Okay. So we are talking actually, we already discussed in previous chapter the importance of the global standard or one set of standard or similar accounting standard, because we said that the similar accounting standard or one set of accounting standard will lead to the financial statement that have a better quality and make the comparison between the financial statement possible, or it makes the comparison between this financial statement more easier. So but even though we said that the accounting or the financial statement is preparing similar accounting standard, but there are other factors that lead to non-comparable accounting numbers. So, for example, even though the measurement of financial asset in Malaysia will be the same with the measurement of financial asset in UK, will be the same with the financial asset in US, for example. We use the same accounting or the similar accounting standard, but sometimes, okay, the financial statement that preparing in these three countries will be non-comparable. So there are other factors that we will look on the reason why this financial statement cannot be compared. First, we are talking about quality of audits. Okay, so even though we have the similar accounting standard, but if the quality of audits in that countries are not okay, it will lead to the non-compliance of the standard. Okay. Number 2 is enforcement mechanism. Okay. Of course, either the enforcement mechanism is lenient or strict. Okay, so if lenient, maybe the company or the country will lead to the non-compliance for the accounting standard. Another one is the culture. We are talking about the culture of the country, the national culture, or we are also talking about the organizational culture. So the culture will lead to the differences or will lead to the decreased quality of the financial statement. Another one, like what we learned last week, is legal requirement. This is also we already touched in the chapter 1. Legal requirement, for example, we are talking about common law and court law versus court law. Okay, so the legal system is different, will lead to the different set of the accounting. So it will lead to the non-comparable accounting. Another one is legal requirement for that country. For example, the preparation of the country, the preparation of the financial statement, okay, is for the different perspective. So it also will lead to the non-comparable accounting. And of course, lastly, we are talking about the socio-economic and political system of the country. Okay. So when we are talking about the international competition, the international competition of accounting standard, we actually refer to both goal and the process adopted to achieve it. Okay. So we look on what is harmonization and convergence. So I hope that the student will not confuse between these two concepts. Harmonization and convergence will be different concept. In harmonization, we said we allows, if we refer to the previous slide, in the harmonization, we allows the company, or we allows for a different set of accounting standard. Each country are allowed to use their own accounting standard as long as the conflict do not exist. Of course, the conflict will exist, we said, because of few reasons. One of the reasons, if we give, in the accounting standard, for example, we give a lot of alternative. Yeah. So when we give a lot of alternative, for example, the alternative to record the inventory, we have LIFO, we have FIFO, we have weighted average, and so on. Okay. So if we have a lot of alternative in the standard, then the degree of flexibility in the accounting practices will be high. Yeah. But if we reduce the alternative, then the degree of flexibility in accounting practices will be lower. So this is what the harmonization they try to reduce the alternative. Okay, so different with the convergence. The convergence, we are talking about the enforcement of single set of accepted standard. Yeah, there are no alternative, but each country all over the world will only use single set of accepted standard. Okay, one set of accounting standard. So what happened is the financial statement that prepared in Malaysia will use the accounting standard. Same with the financial statement prepared in German. Same with the financial statement that prepared in China. So what happened is when your financial statement preparing by using the same standard, then you will produce the same set, okay, of formatting of the financial statement. Okay, so this is conversion. Okay, so conversion using only one single set of accounting standard. Harmonization, we allowed different accounting standard, but as long as we said the conflict do not exist. Okay. Okay, we focus on the harmonization. So in the previous slide, we said harmonization can be considered in two ways. Okay, so normally, okay, the harmonization of accounting regulation and standard, this one, the regulation is a little bit difficult, but the ultimate goal of international harmonization effort is to have the harmonization in the accounting practice. Okay, so harmonization of standards, okay, may or may not result in harmonization of practice. Okay, why? Because we said even though you have standard, but sometimes we are given the alternative. So that's why we said the ultimate goal of international of harmonization is, of course, to harmonize the accounting practices. So once again, harmonization is different from standardization. Standardization, we said, it's more to the convergence, where we said it's involved using the same standard in different countries. Okay, but for harmonization, okay, I stress more. For the harmonization, we said it's allowed for different standard in different country as long as they do not conflict. Okay. Next, we look for the few arguments. We look on the arguments for convergence. For meaning support. Arguments that support convergence, and later on we look on the arguments that against the convergence. Okay. So just imagine each country in the world will prepare the financial statement using one accounting standard. So let's say in Malaysia we use the IFRS, the Financial Reporting Standard. So let's say all countries all over the world will use IFRS. So what happens is we will produce, okay, the financial statement using one standard. So this financial statement in Malaysia will of course it will be different, but since it used the same standard, okay, so it will be similar in other country. So if we have a similar financial statement, it will facilitate a better comparability. Okay, better comparability. So it's much easier to evaluate the companies. Yeah. It's also facilitate international mergers and acquisition. So remember, we already learned in AFA 2, when you do merger or acquisition, subsidiaries have to follow, okay, the policy, the accounting requirement by the parents. So just imagine if you prepare, let's say the parents company in Malaysia, which is preparing using the MFRS, and you have a subsidiary in German which using the German accounting standard. Okay, so this subsidiary in German, what happens is they have to prepare two sets of account. First, they have to prepare the individual account that using the German accounting standard for the purpose of reporting to the German government. And at the same time, when this subsidiary want to consolidate the account with the parents, they have to use the policy, the same standard with the parents company. So they have to translate the individual just now, okay, into the new set of account using this, the same standard and the same policy before the consolidation of account. Okay, so it will involve much effort, it will involve more or additional costs. Since it involves additional cost, of course, okay, it will, if we prepare using the different standard, it will, we said cost is more. But that's why if we only prepare using one standard of account, then of course it will reduce the financial reporting cost. It also will reduce the investor uncertainty and the cost of capital. Why uncertainty? Because the reader in Malaysia, okay, the investor in Malaysia, okay, they know how to read the financial statement in Malaysia. So if we use the same standard, then they also know how to read the financial statement in German. So it will reduce the uncertainty. Okay, let's say if German using the different standard, so the investor in Malaysia, they are difficult to understand the financial statement preparing in German just now. So it will raise the uncertainty among the investor. Okay, of course, I already said just now, reduce the cost of preparing, and it will be simplify the auditing process. And if we also have one standard, it's easier to transfer our accounting staff. Why? Yeah, let's say if we have a different standard, okay, just now parents in Malaysia and subsidiary in German. So if we want to transfer our staff from Malaysia to German, the company will have a difficulty. Okay, why? Because the staff, which is the accountant, which is in Malaysia just now, the accountant might have a difficulty to understand the concept or the how to prepare the financial statement in German. Okay. Next, yeah, because of we are talking about comparability just now, of course, it will raise the quality level of accounting practice internationally. Okay, and of course, if the quality high, of course, it will increase the credibility of the financial information. Yeah. Next is the arguments that against conversion. Of course, some we said some of the shareholders or some of the practitioners or some of the scholars, their support for the conversion. But if we read the article or if we read the book, they are also a group that against the conversion. And the reason why they're against the conversion is like this. One, we are talking about the existing differences between the standard, especially for those countries which are totally different, the legal system different, okay, the socio-economy different. So we are talking about German, okay, we are talking about UK, for example. Okay, so this accounting practice in German, okay, the standard in German have a significant differences with the UK. Okay, so if we try to adapt one single set, it's very difficult. Okay, we are talking about German, okay, which is one strong country, and UK, one strong country. So if we said we want to use one set of accounting, so which standard that we use, German or UK? Of course, it will we said the effect will be to the political of the country and so on. And number 2, for those who are set against the convergence, they also said that if we allow for the convergence, then nationalism and tradition of the country will be gone. Yeah, so it's very difficult because we already are using the standard, the national standard, from maybe 1,000 years before, okay, 100 years before. So it's very difficult to arrive at one universal accepted principle, okay, of the in preparing in account. Okay, next, right now, okay, we are talking about the existing situation. Okay, the well-developed global capital market is already exists. For example, Tokyo global capital market, China capital market, US capital market, and they are okay already with the financial statement or the financial system or the reporting that they use right now. Okay, so it's okay for have a financial statement with a different standard. It's very difficult if we said that, oh, we want to change into one standard only, because this global capital market is already get used with the what happened right now. Okay, another reason, because we said it may cause standard overload. Why overload? Okay, let's say we are talking about German just now. Let's say German, they didn't have a specific accounting standard, so maybe they have 17 accounting standard only, for example. Then we compare to some country that have a specific accounting standard, so maybe this one have 89, for example. There are countries that have very specific accounting standard. So what happened is, when we want to use one different standard, one accounting standard, okay, so the negotiation maybe happen, okay, out of 17, this 10 standard, it's okay, we will use this 10 standard. Out of 89, maybe it's said, oh, we use the 70, okay, so the total will be 80, for example. So it will cause standard overload. Yeah, and the another argument is said that differences in accounting across country might be necessary. Okay. Okay. So this is because of the argument against convergence just now. Even though we see the benefit of convergence is really, really good. But if we look on the situation right now, if we look into the reality, of course, the convergence in accounting standard is very difficult to do. Yeah, so that's why we said that right now is actually global. The world's go for the harmonization. So this is among of harmonization effort that done in the organization, several organizations involved at global and regional level. For example, International Organization of Security Commission, International Federation of Accountants, in EU, okay, in IFAC, IASC, and ISP. Okay, so I will end here for the part 1. We will continue for the part 2. Okay, we will continue this lecture in the video part 2.